morning. Welcome to Connect, California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Dustin Hobbs, Communications Director here at the California MBA. We've got a great episode today. We've got a great guest. I'm excited to get into the conversation with him here in just a sec. But before we do, let's thank our sponsors at Accelerate. Accelerate helps lenders close more loans through better borrower engagement as the mortgage industry's most innovative marketing and sales engagement platform. Accelerate CRM helps lenders manage workflow, contact strategies, lead management, referral, and realtor partners and reporting. Accelerate's engagement platform automates multi-channel marketing through social media, email, direct mail, text messages, ringless voicemail, and phone calls, all pre-built with the strategies and content to enable a better borrower engagement. Accelerate integrates with the software that's powering your business today and into the future. In addition, the platform is SOC 2 and SSAE 18 certified to satisfy the most closely regulated businesses, and that includes banks with mortgage subsidiaries. So for more information or to check out a demo, visit accelerate.com, or you can contact the company at the phone number listed in the description below. So before we get into our conversation here, which we'll dive into in just a second here, I want to toss it over to Susan Milazzo, our CEO, for this week's weekly video update. Susan?
Hi, this is Susan with the California MBA here with your weekly video update. This month, we are having our latest installment of our quarterly members-only webinar. We started those this year as a way to share additional level of information with our member companies. We start out with a legislative update, what's happening here in the California legislature. I will talk about a few benefits of membership to make sure that companies are taking full advantage of their membership with our association. And we also feature a presentation on a topic relative to residential lending and also to commercial lending. So for the month of August, this quarter, we're going to be focusing on technology for both of those industries. So we'll be happy to welcome Josh Friend, CEO at Accelerate. He's going to be providing information on residential technology. And for commercial technology, we'll be welcoming Anthony Romano, CEO of eScreen Logic. That webinar will be held on August 25th. And if you're a member of the California MBA, you'll receive information on how to register for that in the coming weeks. Also wanted to let you know that if you visit our website, we have started a blog. So your opportunity to post some discussion topics and get some conversation going in the real estate industry. Certainly lots to talk about in 2020. So visit our website, cmba.com, and be part of that discussion. That's it for this week, and we'll see you next time.
All right, thanks, Susan. I think we've got a great members-only webinar coming up. So everyone, if you're a member of the California MBA, make sure that you respond to the email invitation that you'll get from our office and check that out. Again, it's only available to members, so it's a great opportunity to take advantage of your membership and get some really good information. So with that, I want to welcome Ryan Chapman to the conversation today. Ryan is the Senior Vice President at Walker Dunlop. He's also the Commercial President on our Board of Directors and been involved with the association for a number of years, and a good friend of the California MBA and lenders throughout the state. So welcome, Ryan.
Thank you, Dustin. Thanks for having me on.
Yeah. Well, let's start at the beginning, Ryan. Why don't you tell us sort of your background, your journey, what, how'd you get into business and how'd you wind up there where you're at now at Walker Dunlop?
Sure. Yeah, I got my start in real estate through an internship while I was in grad school. I had worked for a pension fund advisor over a summer where myself and another intern had conducted a research project, interestingly enough, on what value companies placed on different amenities as they were considering leasing of office space. I kind of think that interesting today because with the pandemic going on, a lot of the talk is about what's going to happen with office space moving forward, and are tenants going to move from the high-rise big CBD offices out to the suburbs or not. But anyway, learned a lot of the basics of real estate terminology and the differences between the different quality of assets, based on their location, their access to amenities and transportation and such. After the internship, I was fortunate enough to leverage a lot of the contacts I made at that firm, which ultimately led me to the mortgage banking and mortgage brokerage industry, where I landed a job at Johnson Capital, which was a California-based firm that at the time had maybe 7 or 8 offices, mostly in the West, but one or two back in the Midwest and in the East. There, I started off just working as a real estate analyst, learning the terminology, learning the ropes of real estate. I worked with one of the firm's consistently top originators, got to touch a lot of different deals, work on a lot of different types of transactions, got exposure to a lot of different aspects of real estate finance. You know, in addition to representing a handful of insurance companies and brokering loans to the conventional market, we were a Freddie Mac lender, but we weren't a Fannie Mae lender. So we did our Fannie Mae loans through other Fannie Mae lenders, and one of the top Fannie Mae lenders that we worked with was a company called Green Park Financial, which was the mortgage banking, the Fannie Mae lending arm of Walker and Dunlop. They were an East Coast-based company that had started growing to the West. As I mentioned already, we were a West Coast company growing to the East. Well, in end of 2014, Walker and Dunlop acquired Johnson Capital. At that time, I was straddling, kind of working between production as well as kind of operations and corporate. And I transitioned over to an entirely operations role, which is where I am now at Walker & Dunlop. And I focus, I manage a team of analysts and closers, and I focus on improving efficiencies and collaboration across the platform.
Yeah, all right. Well, that's it. It's an interesting journey, especially when we've talked to so many folks on the whether on the residential or the commercial side who are on the the production or the origination side. So I'm curious to hear your insights sort of from the operations side. So let's start, get in a little bit here. How is the company adapting to the pandemic right now? Obviously, I mean, you mentioned it's sort of top of mind for everyone right now. What's the the status there at Walker Dunlop?
Yeah, you talk about the new normal, and I was commenting to someone the other day. I really feel like we've adapted to the new normal in a sense, although now with us going into the fall and a lot of our employees and their kids starting school, whether it's going to be virtual or in person, that new normal is probably going to be looking a little different, a week or 2 weeks, a month from now. But from the perspective of how we've adapted, our company, they telegraphed the idea that we might be working from home in early March, maybe a week or two prior to everything really happening and everybody being sent home. We were sent home right, like March 12th, March 13th, right as everything in the pandemic was unfolding here in the United States. And the company made a really concerted effort to get our IT department and our office services teams to get everybody connected and up and running as quick as possible. And we managed very well. Clearly there were, it had some issues where people maybe didn't have the right tech in place. We worked to get it to them, made sure that people worked to have a reasonable space to work at home, started having more calls and whatnot to keep everybody connected. We've seen things that have happened as we've unfolded here is we've got a number of different departments that would have weekly or bi-weekly calls. And, the calls that were bi-weekly have now moved to weekly. Calls that were weekly might be happening twice a week now, where we had participation in calls that might have been department specific. We have a lot more overlap now. So team members in our investment sales group will listen in on the capital markets group call, and capital markets group folks will listen in on the multifamily call. The calls are very structured. They're typically at the same day, same time each week. So there's a consistency in there. We've added a nationwide call for all departments to talk about the goings on of the week, the deals that are getting done, the challenges that people are having, talking about things that are happening on the stimulus side or on the political front and how that may or may not affect what we're doing. We started hosting a series of calls to clients and prospects hosted by our company CEO. Interestingly enough, they're on Wednesdays. Our company's called Walker and Dunlop, and it's a webcast. So,
that's perfect.
The Wednesday Walker webcast is what it is. And it's been very well received. Our CEO's hosting leaders from industry, from the educational world, from politics, from healthcare to talk about pertinent issues of the day, whether they're directly real estate related or related to the pandemic.
Yeah, it seems like everyone has sort of figured out that if we can't all see each other in the office and gather around the proverbial water cooler and find out what's going on. That it seems like a lot of companies, it sounds like you guys specifically have figured out that it's just more communication, and like you said, more overlap, and it's not weekly or monthly meetings. Now it's much more often, and like you said, more cross pollination between departments and job functions.
Yeah, sure. I've talked to some team members who I know would have a weekly team call, whether it was everybody in the same office or if they had a team member that was in another office that would join via phone. And a lot of those teams have gone to daily calls. They'll connect at 9:15 in the morning or 4 in the afternoon, talk about what the critical path, what the deliveries are for the day, what to pause on, what to move forward on, to really make an effort to move the ball forward. With another thing that's happened, no one's traveling. We have the ability to travel for business now, but it's pretty restricted, and very few people are wanting to get on airplanes. So we're leveraging the fact that we're a nationwide company, and I'm sure other firms are doing this as well. Was talking to a team member just the other day here in Southern California who's working on a transaction in the Pacific Northwest. We happen to have a couple teams of folks up in the Portland area. So he's connected with one of the Portland team members, and she's going to help him by doing a site visit, getting some pictures taken at the property, which is a condition of the closing. So if he can't make it specifically to the property right now, we can still get that transaction done.
That makes sense, and yeah.
One other thing that we've done is in managing our staffing. We didn't put a hiring freeze in place as this all unfolded, although we kind of reverted to maybe more essential hires. And we looked at where there was potentially some capacity as maybe a team or a department maybe wasn't as active, and looked at the ability to reallocate some resources. If the production volumes or if the transaction volume initially fell off because lenders might have stepped back from the market in some regard, although we have been able to be very successful, we had a lot of requests coming in on the forbearance side on our servicing portfolio, whether it was through the insurance company deals that we service for or our own portfolio, and so made our teams available to help out in that regard.
Got it. Well, and now I'm curious, you've kind of touched on this a bit, but I'm curious if, from the operations side where you're at, what's, maybe the biggest challenge right now for operations, folks like yourself?
Sure. Then some of these things maybe be challenges at any time. Maybe they're a little more exacerbated today. One of them I'll touch on is, I think, really kind of because of what's happening right now and the way that we're working in a distributed work environment. The other one is, in operations, we're always looking for ways to do things that are better and be more efficient and provide new resources and tools to our teams. And a big challenge we have is adoption and buy-in. Folks are used to doing the things that the way they've done it always. When we launch a new or improved system, we've got to show some immediate value to the user. Otherwise, they're likely to not buy into it or adopt it. And it becomes somewhat of a chicken or the egg in a sense, right? I need you to use the system to provide me the data as you're putting it in real time, so that I can aggregate that and show you the value in what I'm spitting out to you and showing you, but you can't see the value until that's there, right?
Yeah.
And, if there's a bug or a glitch in the system, you're going to lose their attention very quickly. So we might have the ideas and ways to put it in place, but we've got a development team that's got to help us put it all together from a production development standpoint. And so the critical piece there is to identify the issues quickly, to do the workarounds you need to get them done, but get in there and get them fixed, and finding that fix is paramount.
Yeah.
The other piece that really kind of comes out, and this is really for me, and I imagine for others as well, exacerbated, is time management. I mentioned to you earlier, we've added all these calls, and we're a nationwide firm, so when I start my day at a normal work day, if I get on at 8:30, it's already 11:30 on the East Coast. And if people are going to take a break for lunch and they got other stuff going on and they're all working from home and you have all these other things going on, you've got a short window of time before that break happens. And then when I come back from my break in the middle of the day, if I'm getting the lunch in, their day's kind of ending. So you gotta kind of work with that confines. I'll have days where we'll start calls at first thing in the morning, and they'll be back to back to back. And you have very little time to take the information you talked about in one call and aggregate it and maybe do a follow-up thing before that next call starts. So, what I think is really forced me to do is think about who am I interacting with today? What are the needs? What's everybody's priority? Do I call the team member on the West to deal with his or her issue, or am I working with somebody back East so that the tomorrow morning we're not just in this endless cycle of not being able to connect with one another? And you get real adept at managing your screens. Some folks are working off one screen. Others, in the office, we always have two screens. So you're managing those screens. You've got the Zoom call happening on one side of the screen. You got your note taking happening on the other side of the screen, and just trying to manage the whole process.
Yeah. Well, and I have to imagine too, I mean, it is, at least I found this, that, that additional workload that we all have right now, trying to manage, additional calls and communication. It's kind of nice to not have your, commute that most people, especially in California, have, that long, hour, 2 hours a day commute. So at least that's kind of helped out. You add on a couple more hours worth of work, but, at least you're saving some with the commute.
Yeah, I've got my stead response when people ask me how things are. I say, I love my commute.
Exactly.
I don't
I've got about 2 feet between my bed and the desk.
Right. The flip side of that is, at the end of the day, you gotta get away from it. You gotta put that screen down and disconnect.
Yeah, no kidding. It's almost like that, for me at least, the hour drive home is almost a nice way to, disconnect and be able to go home and be present there.
Right.
It's definitely a challenge. Curious, what are you guys hearing about? What are you hearing about when you talk to your producers about the state of the industry itself?
There's still business to be done. There's no better time to be a mortgage broker or mortgage banker as an advisor when things are challenged. Folks are really in need of advice. They're in need of connections to capital. There is capital out there, certainly, and we'll talk a little bit further, I think, about some of the sectors and kind of how they're doing. And clearly, retail is outside of the daily needs, grocery anchor, has got some issues and challenges with whether or not the inline tenants are open, able to pay their rent, and those kinds of things. But there is definitely business out there to get done, and with the stimulus that's the government's put in place, with the bond market trading where it is, interest rates, who knew they could get this low? We're seeing
it's low. Yeah.
Yeah, and potentially for the foreseeable future being low. Now, no one's got the crystal ball. I'm not going to guess to where it's going to be, 12, 18 months from now. But this is a great time to transact if you can, right? You can get on the multifamily side, long-term fixed rate financing, well inside of 3%. On the commercial side, you're in the high two, but probably in the threes kind of thing for moderately leveraged transactions. It's our producers are doing everything they can to stay connected to their borrowers. Initially it was solely phone calls and Zoom calls, and in the business, and I'm sure in other industries as well, some people adapted to the idea of having a video interview or video conference call very well, and others have been I'm still on my phone and that's how I work, and that's fine. It doesn't mean you can't connect with them. And now that in certain markets things have opened up more and people can actually have meetings. You can have a socially distanced meeting. You can get together with a small group of people and talk about things that are important. The other thing that our teams have done is they work on that collaboration angle. They can't, maybe they're not traveling to go visit the client, but you might have a investment sales team member from Dallas working with a capital markets producer in Los Angeles talking to a client that's in Denver, and you can get it done.
Yeah, yeah. Well, then speaking of the market here, so obviously, I mean, you mentioned problems that I think it sounds like retail is going to have. What do you think? What's the biggest or the biggest hurt that we're going to see long term? Is it going to be in the retail sector, or office, or hospitality, or something else?
Well, sure, Dustin. I put the positive hat on, right? Everything's going to be better. It's all going to get better. Everybody's going to be fine. Clearly hospitality has taken a huge hit right now. But that said, the staycation concept, there's a ton of pent up demand. People are really wanting to get out and go and do. And so where you can drive to, which a lot of within the country, there's a lot of places that folks can drive and can vacation and can do it in a socially distanced manner and be safe about it. So I think some of that will actually, that the hurt won't be as bad. But right now, you had a few months where hotels were effectively closed. And when a lender is looking at underwriting a deal and looking at trailing months and seeing what the likelihood going forward is, and there's so much unknown with what is going to be the next step with the pandemic. So hospitality definitely has got a challenge, and the resort hospitality where islands where you've got to fly to, I got to believe that's going to be a huge hit. We looked at some traffic data came out in a report, I believe it was on Bloomberg, that talked about the traffic patterns cities and states across the country from February through sometime in May or June as things started to open up. And as you can expect, a lot of stuff dropped off dramatically. Now this is driving traffic, kind of commuting back and forth.
Okay, this is that. I was going to say, I think there's been something out about that iPhone, using the iPhone data to track movement.
Right, dropped off dramatically, and then it started to pick up. But one place that it has dropped off and stayed dropped off in the United States is Hawaii, right? Because the tourists just aren't able to go and get there and be there. So if you think of that kind of perspective, that's going to be a big challenge. Retail, right now it's tough, like I mentioned earlier before, but I think we get through that. I think we see, businesses are being resilient in a manner. Their restaurants are moving their seating outdoors. Can they continue to operate on a half capacity issue? That could be a problem kind of long term. But retail, outside of the restaurant side and where you go and experience, retail is seeing some stress anyway from the online world, right? So maybe the effect on retail is not just related to the pandemic. It's kind of a trend that was going that way. Multifamily it remains the darling of the industry. You've got incredibly low rates, lots of capital going after multifamily. People need a place to live. That's gonna continue to be there. Office is an interesting one. Our offices are now open. Most of our offices, I should say, not all of them. We're not requiring people to go back to the office right now. We won't require anyone to go back to the office at least through the end of this year, into the first of next year. And I think I'm hearing a lot of other companies are doing the same. And we adapted and we're able to work remotely. But at some point, we're going to want to get our teams back in the office. It's important to be able to collaborate. It's important to be able to train. It's important to be able to mentor. And it's a much more conducive environment to work and get business done. So, does office shift does the CBD shift? Do people move to the suburbs? Yeah, maybe, but that maybe is a short-term thing because there's still going to be a draw for the New York City office, the San Francisco office, the Chicago office. So if you say long-term, does office really take a hit? It might change in some sense and in the demands of what people are needing as far as overall space. But I think it still is going to be a viable space. It's just going to be a challenge for the short term.
Do you think in this, we didn't, discuss this beforehand, but I'm curious now that you mentioned office, it, kind of triggered something in my head. Do you think that there's going to be a move away long-term from sort of that open office concept that seemed to be in vogue in the last, 5-10 years or so?
Maybe. I mean, I think it depends on some businesses thrive in that environment and others don't. I think that the virus obviously has got to get under control. The idea of sharing a desk right now is not even possible. So that's going to make that sort of environment very difficult to do. You're going to be converting that space in a temporary manner so that you can maintain the social distancing versus having it be that big open space. But time will tell on that.
Sure. So let's switch gears here. I'm curious your thoughts on this. Because I know this has been something that's been sort of close to your heart for a while here. How is the industry doing on getting more young folks involved in the industry, engaged in the industry? And I mean, that's through whether it's future leaders programs like ours or other associations. What's your sense on where things are?
Sure. And those are great questions. And the thing that you mentioned there is programs that are available to people that are already in the industry. All right. And so those are really important because they're making the connections for people who are younger in their careers or newer in their careers to connect with senior executives, to connect with folks on other sides, aspects of the business, other components of the business, whether it's the California MBA's Future Leader Program, which has a great opportunity to get folks to connect and network with others. Then NAOP has a similar program. It's Young Professionals Group, which is very successful. ULI's got one, and our company supports putting folks in those programs. But those are all ones that are, as I mentioned, there for folks that are already in the industry. I think the key now is to draw people into the industry, and you really have to. You got to go out and you got to promote yourselves. You got to promote the company. You got to get out in front of it. You need to visit the schools. You need to participate in the career fairs. A lot of people just don't come out of college today and say, I want to be in real estate finance.
You're one of the few that I've talked to that, I mean, it sounds like that was your career path from early on.
Well, no, that was a little later. It was out of grad school that I got into real estate. I floated around in a couple different industries before that. It's showing people what makes real estate work. That there's all different components of the sector that you can be involved in, and it's internship programs. Touting ourselves, it was very challenging this year with the idea of having an internship program, but we made a concerted effort to still have it. It was truncated. It wasn't our typical internship program is 10 weeks full time, working in an office with a team, a producer or production team, learning the business, working on real deals. It was more of a mentoring opportunity this summer. The interns still had a group project that they worked on. They had a schedule each week that was a few hours a day. It included a quote unquote lunch and learn with senior level folks, senior executives at the company to talk about what they do in their business and how the business runs. But still something to show people what we do in real estate and that you can make a great career in it.
Yeah, I think one of the interesting things, and it sounds like you guys kind of do that, take that approach at least, is that, just talking to, younger folks and you know, at least in my social circle and others, that you know, you tell them that, you know, I'm in the mortgage industry or the real estate finance industry, and you know, their immediate thought is, you know, a realtor, and then after that they don't really know what else there is. And to your point, I mean, there's tons and tons of opportunity and tons of different positions. I mean, like, you're on the operations side, dealing with people and people issues, and you know, how to make the company go, and you know, you can be behind the scenes, in front, you know, and all those different things. I think that you're right about that, just being an education thing, and you know, talking to people earlier on in their you know, career paths.
Yeah, no, that's an interesting concept. We've attended career fairs before, and you do get a lot of that comment about, oh, well, my uncle's a real estate agent, and then you go into kind of a, you know, discussion on, you know, yeah, that's a component of the real estate industry too. That's the residential side. We're on the commercial side. This is how the commercial side is different. This is how it's similar, but it takes education to get out there and explain to people what it is that we do.
Yeah, exactly. Well, and then, you know, I'm curious to know, you know, especially with the pandemic, and you know, I'm curious, you know, even with the internship program and stuff, how are you guys, you know, maintaining your corporate culture? How are you, you know, how is that work from home thing affecting corporate culture beyond just the additional calls and stuff? How do you maintain a culture, you know, not only, you know, in the environment we're in, but at a larger company that you guys have there?
Sure. Yeah. No, yeah. I wouldn't call us a large company. You know, we're definitely larger than when I joined. When I joined, we were at about 450 people, and we just passed 900 employees in the last week or two. So we doubled in size in the 5.5 years that I've been with Walker & Dunlop. But you know, it's definitely 900 people is a lot of people to keep track of, and to keep engaged. You know, we consider our employees to be very driven and very tenacious. We talk about our values. Those are two of the values that we hold dear, and we expect that, you know, they're going to be resilient as well. But at the same time, you know, we recognize the pandemic is going to affect everyone in a different way. It's the challenges to them and their families and folks around the world, and everybody's situation is different, and they're gonna you know, respond to it in a different way. As I mentioned, you know, our offices are open now, and most of them are, but less than 15% of our workforce has gone back into the office to work. We're just continuing to manage working remote. So we've done a lot of things to really keep folks connected and engaged and collaborating. You know, our CEO posts regular videos on the going-ons within the company and announcements that affect what we're doing. Our HR department is pushing out regular communications related to COVID, related to our benefit plans, related to resources that are available should anybody have any need. You know, on the social side, we've encouraged our small group happy hours, which, you know, they may seem silly at first, but it's those times to kind of just stay connected. You know, somebody who's working, you know, morning to night in a, you know, cramped environment, not having the ability to get out and about and see other people, or is caring for somebody that's at high risk and therefore can't go out. You know, just encouraging one team member to reach out to another and have a conversation. No particular agenda. Just give them a call. How are things going? What do you got going on? Anything exciting happening?
Yeah. Well, I think, you know, we are social creatures, so I think you're right that's, you know, it's such a huge part of it, and I'm, you know, seeing more and more from companies that you know, having that engagement at the top, whether it's the CEO or, you know, at least the C-level executives, be more out front and be more you know, communicative with the staff and with the company. I think that goes a long way right now.
Yeah.
Okay.
On that, we've hosted small, these would be a little formal but informal. We've hosted small group Zoom meetings or conference calls with 20 to 25 employees and one or two senior executives. Maybe one that they work directly with, maybe one that they don't. Give them a chance to talk about, you know, what's happening in the environment, and then just open the floor and let people ask questions or talk about what's going on. We've gotten some great feedback from that, in that, you know, people might not be as willing to open up and have a big conversation in a large group, but in a small group they will. And the executives and the senior team can take that back and work with the company to find out ways to add resources. One thing that we added was started a group called employee resource group called Alone Together, right? It's it's that extra thing that's out there for you to be able to connect with your coworkers and associates around the company.
Yeah, that small group idea, to me, that seems like something that, sticks around, after the pandemic, after things get back to normal. That seems like something that's, an enduring part of, corporate life now.
Sure.
Yeah. So we're starting to run out of time here. So let's, our last question here, that's a bit of a softball, because I know this is, definitely in your wheelhouse and something you're passionate about. And I'm curious, what's, from the commercial side, we talk a lot on the podcast here about residential issues, but on the commercial side, what's the big, advocacy issue that everyone should be focused on right now? And how crucial are industry, advocacy efforts right now?
All right, there's no question that advocacy efforts are crucial all the time, more so now than ever. There's a lot of well-meaning initiatives that the legislature, and we're speaking mostly in this regards to California, have to deal with issues surrounding the pandemic. But there's a lot of things out there that really need education and need information to be put forth in a way that the legislation that is passed is meaningful and is useful and is helpful to all. A thing that happened earlier this year was there was a bill, it was called SB 939, that effectively was potentially allowing commercial tenants to vacate their leases, effectively in violation of what we would see as contract law. That was an important issue for us to get our advocacy up into Sacramento and talk to the legislatures about. There's other pieces right now with forbearance measures and eviction moratoriums that are constantly being surfacing or resurfacing. And then this fall on the ballot, the split roll tax has made it to the ballot. And that, if the split roll tax measure passes, it could be detrimental to real estate and commercial real estate in California, with potentially seeing property taxes on commercial properties skyrocket in some cases. So, I've been real active in the California MBA's legislative day for years. It's a great opportunity for folks to get in front of legislatures, whether they're the legislator that is responsible for the district that you live in, or is one that is responsible for working on legislation that affects you, the people around you, and the businesses that you're in. And it's a great way to get involved. I would encourage folks to consider doing that, and it helps move the industry forward.
Yeah. Well, and I think for anyone that's curious about what's going on with the ballot measures, I mean, absolutely, you should be registering right now for the upcoming Western States CREF Conference. It's 100% virtual, and but we will be having a specific panel session dedicated just to the ballot measures, and having experts from California Business Roundtable and the California Apartment Association to talk about the impact that those could have on the industry, like you mentioned. Well, Ryan, hey, thanks for the time today. Appreciate the discussion. Always good to see, if not, shake your hand in person, at least, see your face here. And we'll hopefully see you here in the coming months when things open back up a little bit, when we get through this, and be able to actually shake your hand. So again, thanks for joining us.
Well, Dustin, thank you very much. It's been a pleasure.
Yeah. Well, and if you enjoyed the conversation here, make sure and subscribe to our YouTube channel here. You can also subscribe to us and listen to the podcast on Spotify, SoundCloud, and Apple Podcasts. And with that, I'll say goodbye, and we'll see you next Monday morning for another episode of Connect.